We have a turnover of 4,000 crore as
Mm-hmm.
on 31st March 2023. And out of that, 65% is sales that we do from company-owned, company-operated stores.
Okay.
And 35% is what we sell through our exclusive franchisees. So this is how
Okay.
the overall sales are broken up into. The second aspect to look at is that 85% of our business is through sale of gold jewelry. 10 to 11% business is the sale of diamond jewelry, and the remaining 3-4% is the business that we sell through, platinum, silver, and other products. So
Okay.
this is how we do it. And the third aspect to look at the business model is whatever is our gross margin, we when we sell to the franchisee, they invest in the inventory and the capex, and they the margin that is there, the gross margin is divided into like we keep us to ourselves around 30-35%, and 65% of the gross margin we pass on to the franchise.
Okay.
So these are the three parts of the business model that you need to take care. We are majoritarily hedged. So most of, we take gold as gold loans from the banks, which works as an auto hedging process. Then we do future sales, or we sell call or buy put in the options. So this is how we do our hedging, and majority of our inventory is hedged, and it is guided by the the board policy, the treasury committee, and the treasury team are reporting to us every day. So we feel that if the gold prices go down due to our hedging process, we will lose on inventory but gain in the hedging. And if the gold prices goes up, then we will lose in hedging and gain in inventory. So this is how it is managed, and the risk is mitigated. So you see, in the last financial year, our margin has only gone up by 0.3%, is because in spite of the gold price rise, we have done hedging, and that is why the impact has only been of 0.3. So this is the outcome of the process that we follow. See, organized market is around 45 to 50% of the market, and unorganized market is around the rest 50%. So unorganized is also getting organized. And we as organized players is not only fighting amongst ourselves, but we
Okay.
want to capture more of the unorganized markets. And in our
Okay.
own ways and efforts, we are trying to do the same. So competition in amongst, ultimately there will be 12, 15, 20 top players in various markets who will capture the market share. But then that is how it is. It is the, the system processes with which we are expanding. And then we are focused on diamond jewelry along with your gold jewelry. Those are, platinum jewelry, lightweight diamond jewelry, lightweight gold jewelry. These are the ways in which the growth of the business will continue to happen. Create jewelry. See, our one of our strengths is the Calcutta Karigari. Sitting from this part of the country, where the land of karigars, whichever part of the country you go to, most of the karigars belong to the villages from in and around Calcutta. So we are working directly with them. And that is like French wine, Belgian chocolate. Calcutta Karigari is what we want to take forward. But the designs are hyper local. We have 1,20,000 designs, 13 Indian states. Every state has its own unique needs and taste and preferences. So we are creating designs. We have a 20-member design merchandising team. They are creating designs so that we can cater to the customer needs. And another aspect is our average ticket size is only 60 to 70,000 rupees. So you can imagine and back calculate, it is 8-9 grams of gold, which is like within the budget. Our customer base is the upper middle class of the customers. And if you look at our growth also, if you look at the map and where we are present, we are leaders from eastern part of the country. And we want to focus along the Indo-Gangetic plain in the eastern and northern part of the country. And that market itself has a huge potential. So this is how we will play to our strengths. We have a 50-year-old brand legacy. We have the capability to manufacture jewelry within the budget of the customer. So all competition will come with their strength. We will come with our strength, and then we will win the customer. We have more than 20 lakh customer database. We have every year 5.5 lakh transaction. Everything is, this is how we look at it, and we will continue to grow. Eastern part contributes almost 65 to 70%, and northern part contributes around 15%. So only West and South contributes 5-6%. Even in terms of number of stores, it is in the
Okay.
similar manner we have distributed ourselves. So we are like a D-Mart strategy. We will focus on where we are and penetrate into the smaller towns. We'll use our franchisee model. We have 75 own store, but we have 61 exclusive franchisee. Now that is what will allow us to penetrate deeper into the towns and of the country, and with the growth of the country we can grow. So this is the inherent strength with which we are working, and we believe and we hope that we will grow. It's a cash and carry kind of a model. Like, so people are buying the stock outright from us. They are investing in the capex. So whatever is the thing, as I told you, 35% of the overall margin we keep to us, and we pass the rest 65-70% to the franchisee. Simple
Okay.
model, and that is how it is working.